Dennis reminded us in the chat.
Thanks for that, man. All right. So let me just go over this. So on the daily, this thing looks like an uptrend. Just with this amount of data, because if I zoom out a little bit more, it's not really in an uptrend. But we're just focusing on not too much, all right? If you guys know what I mean. So going up here, started to range, came down multiple legs towards that same area. If, let's say, that zone is trying to resume a buy from here, we know this might just be a primary sort of situation, and there could be people trapped there with a range. This could be the divider, right? Yesterday when we were talking about before the, what's it called, secondary comes in to go up. So just based on that, it's this zone, right? It's this zone that we're working with. So when we were around here yesterday, we had a few things going for us. The first thing is, now this is 240, yeah? So when we came towards that zone, high volume at the bottom, which is all very good, not much slowdown. So before the 240 guys want to think of the sell again, they have to at least get their pullback, all right, at least towards the 50 MA, right? So yesterday, when we were around here, this would be ideal to attempt a buy. Yeah, that would be really nice. But unfortunately, the pullback was a little bit too shallow. We couldn't get price down towards here with the volumes and all that kind of stuff. Yeah, but right now, like you said, Casey, we are a little bit too close towards the top. And yeah, a bit too close. And where are we going to release from? It's tough to say exactly where.
Lucas, if it goes down to the trap area down, would it be a good trade? So if it goes to this area until here,
then that's not too safe anymore, because you have to go back to 240. Because why is it not safe? Because on this time frame, at least, we are counter trending, right? So if we are counter trending on a 240, we just need to check if the 240 guys are trying to refresh. So in this case, if we're coming down, no slowdown, right? So a proper refresh would at least be around 50 MA. 50 MA is there. If, let's say, we want to pick up a buy here, we may run into the risk where they are launching their sells and we're counter trending when they are launching. So the safest buy would be around here when we were up there. Otherwise, we gotta wait for all the sells to die out and then do the buy from there. Does that make sense?
Yes, thank you.
Lucas, you said that the primary is, let's say, this looks like a V. All this is primary, but if you go to details and you see the wicks under the SNR, where the last guy, couldn't you say that that was the primary?
You need to annotate. I'm not sure which one you're talking about.
I think Naveen talked about this as a primary. Yeah, the first try to here. Went down and then went up like a secondary. Maybe if you,
then this would be a secondary.
Yeah.
Yep, that's fine too. So that would be a little bit small. It depends on what time frame you're looking at. So this is where I will try and make things a little bit simpler later. But regardless of what it is, right? If this is primary or or if there's already a secondary here, all you need to know is there's a zone here on the 60, all right, and there's high volume in that area where when price pulls back, it's gonna release. You just need to know that you're not counter trending. That's the easiest way to approach.
Yeah. The result is the same anyway, so
yeah,
you could say that.
usually they will end up in the same area. Whatever you want to call this piece or these piece, the primary and secondary part, usually the safest trade will end up in the same area kind of situation.
Yeah, exactly.
Yeah.
Now it has to not get down from here. It just has to go up if it's gonna continue. But I understand that that's not a safe trade because of the distance of it.
Yeah, because these guys may still think it's a sell right now with this refresh coming in, taking out this guy who started that kind of situation.
Yeah.
Okay, yeah, this is so yeah, Casey, I agree with this one. Not too much we can think about right now. All right. Any other pairs, Team B?
The Aussie USD is in an interesting area, but the volume is not on our side, so that could be something maybe to, I don't know, in New York or tomorrow to take down.
Yeah, maybe. I'm just worried about this and this.
Yeah, you have to have much more volume.
Yeah. So this is the part where although we know the overall flow, right, is daily is trying to push down. Yesterday went on to the weekly and monthly kind of thing. We know it's gonna push down, but if we are trying to trade today, and let's say if we're sticking to the lower time frame, 60-minute time frame, it's not safe yet for us to do a sell.
Is it possible that it's gonna wanna come to this trap before going down? Now it's here. This little trap is under all this. Maybe it's gonna need to come up to here before trying to come down.
Not really, because if you're assuming that, so let's say you're thinking about a release from this zone here, right here. This zone is actually pretty important because it's this area here with this area here. So below this SNR, everyone is gonna think it's a sell. So if it does come up there, it's not gonna be so easy for the sell to continue because, you know, what happened here? Volume, everyone sold, guy taken out. This is not gonna just do this. It's at least gonna try to push up.
That's why it belongs to the bigger boy. It's gonna take time before getting ready. Okay.
So volume isn't on our side for this one.
No, it's not.
So it goes back to the thing that we spoke about. If people were really trapped up there, and if this trade is really on situation, it should just touch and go quickly, especially when we clear all these lows. So if it does go higher than this last little trap, we have to assume that the sell is not happening anytime soon.
No, right. And you see all this very big range, and this is just like a poke down and coming up. So this could be, as you said, a very long time.
Might be a poke down.
Yeah.
Okay. Any other pairs? Ian, you have a question? Go ahead.
Not a question. I have a pair.
Oh, okay.
To look at.
Yep.
It's euro, British pound.
Okay. What are you looking at?
Yes, on 1 hour, on 4 hour, I started from 4 hour. I see here a big range.
Okay.
In this, it's a big range.
Mm-hmm.
Here, it's something like a probe. Okay, in this range, sellers tried, and didn't succeed. Succeeded a little bit, but the last try is here. So I consider here the last trap. And I'm expected to go up, but not too much, because on the daily it's a downtrend or something like this. Maybe from here, it's a good trade on 1 hour.
Buy to that area, you're saying?
Yes. Buy from here to here.
Okay. So let's see, daily.
But I'm concerned about the sellers, because the 50 MA and 20 MAs on daily are touched.
Yeah.
But yeah, this could be the primary, and now I expect the secondary to go down.
Yes. So if this is all slow down, right, in a downtrend, yes, this could be your primary. Primary cannot go far because of these zones, right?
Yes.
If they attempt and fail, your secondary goes from there. So what you're trying to do is buying this piece, which is, again, I'm not a big fan of, because of, the types of traps we have. Sometimes we get, so let's say we're working with this push. Sometimes we get this type. What's this? A. Right? Otherwise we get chop. Otherwise we just slam through.
Yes, or C.
Yeah. So yeah, that's an idea to do the buys, but I have done trades like that before, and it doesn't really end well for me most of the time. So if you're trying to look for the buy, then you have to look at the volume. How does the volume looks like for this uptrend?
The volume from here to here. Okay, started with some volume here. Then we have some volumes here. Sorry, volume, and this uptrend is in danger because we have a high volume somewhere here, or here, here. Okay, so it seems to be healthy, this uptrend. If we look at if we look at the guy who started it with volume.
Yep. So, but you said it's not healthy because there's volume here, right?
Yes, but it is, it's at the beginning, at the guy who started it.
Okay. It doesn't really matter because you're just looking at this overall chunk as a whole.
Okay.
Yeah, and then seeing where high volume is. So high volume is here, high volume is here, high volume is here. That kind of situation. It's not so much about which guy started. You just want to look at from this bottom to the top, where are all the high volumes? Like that. So it's okay. It's not healthy, that's for sure. The other thing you want to see is you have high volume here, right? And this guy actually got killed, retest, and pushed back down. So on the 60-minute itself, doesn't really seem like the buys are still in control in that sense. So what you need to do now is make sure this guy is taken out, this last seller, retest to buy. But that wouldn't be so safe, because if we do come up there, this might just be the higher time frame primary and secondary, this zone to push down. But you don't want to buy it right now either, because the fact that we are still very much in a seller's territory. Does that make sense?
Yes.
So you know there's a chance where this could happen, but buying it here is super risky, right? But buying it right now, that is a lot more advanced, unless you see a huge rejection and then just treating it as a range to try and buy it like that towards the upside. But generally speaking, I wouldn't take trades like that. I would follow the flow and take this. That would be much more easier. Or this secondary on a higher time frame, which is also a trap, which is, I think, a lot better.
Yeah. Okay. Which is a good scenario in this pair, to take the sell from here and then add positions here, and add positions always until on the daily lower low.
Yeah, ideally, if this is the daily trying to refresh, you would expect price to come down to there, but you would know this area is gonna cause some issues. This area here. So you will see reaction from there for sure. Depending on how strong this is or how weak it is, then you can continue your sales from there.
Okay, so we have trades here, here, and here. We can add positions until at least here.
Yep.
Or can we take something here, add position here, take something here, add positions. So take from here 50%, take from here 50%, and here to add again the position we've taken.
You can do that. That's fine.
Mm-hmm.
Yep.
It depends maybe on the health of the downtrend in this case.
Yep. Otherwise,
on 1 hour.
Yeah, otherwise it's easier to just take one trade from here, secondary, as it pulls back. See if you want to hold true. If you want to hold true, then it may get through that zone, and then you get the other pullback to continue to sell if it sets up as perfectly as we draw.
But here we should take something like 50%.
Yeah, you want to take action there for sure. Yes.
And here add again what we've taken here.
You can do that
here.
Yep, you can. It's just a little bit more holding period. It's fine.
Mm-hmm. How much the size should be in our stage now? 1% from portfolio or 2%? What do you recommend?
What do you mean? How much size to get?
On the real account. On a real account, what should we try to the size to be? 1% to risk 1% from the real account?
No, you want to practice at least on smaller size, at least 0.25% first until you get everything nailed down. Then only you add more size. Slowly build yourself up to 1% or 2%.
Okay, thank you. Thank you. That was my best pair for today, but not so happy because of the daily.
Yeah, daily is definitely not saying it wants to go up for now.
Thank you.
All right. Yep. Any other pairs you guys looking at? Maya, Setiawan, Dennis, Williams, Jay.
Can you take a look at pounds US? I just have some questions.
Yep, go ahead.
Okay, so this seems like hold on. So far it's coming down, right?
Mm-hmm.
But the volume here doesn't seem like a healthy
Mm-hmm.
downtrend.
Mhm.
And here's another volume for the uptrend.
Mm-hmm.
Can we consider this a trap here?
Yes, it's definitely a trap. It's definitely, well,
Can
it's
we take something like this?
yeah, you would start to think of that, but what else would you be considering?
Mm,
So you have a big range, not a big range, but what you have is high volume, right? At the bottom of this downtrend.
yeah.
Right? So you're thinking of doing a retest or release to go up,
Mhm.
right? So what else do you need to consider in this situation?
The
The
higher
down-
time frame? Or
No, the higher time frame, but you need to think that you're not really going with the trend.
oh yeah, this is a counter trending.
Yeah. So in this case, we just want to see if we are going against a higher time frame that might just be doing their primary.
Okay.
All right. So let's hop on to the 240. Let's see. Okay, 240 is in a downtrend, that's for sure. What you see here is we have decent enough of slowdown, right? We pop up. That pop up will invite buyers, right?
Okay.
If it invites buyer in this downtrend, what does the seller think? What's the seller thinking?
The buyers are trapped, maybe. If
At this point, when the buyers came in, they would think, okay, there's buyers now, so give me those buyers for the higher time frame to sell. So remember yesterday when Naveen was talking about the more miniature scale of looking at the primary and secondary? This
might be primary.
yeah, this might be a primary. And then the buys that we were thinking of around here is risky because for these guys, they might think it's the secondary to resume the sell.
Okay. Okay, got it.
Yeah. But we also know that sell wouldn't work so easily or this one here because of all the high volumes at the bottom.
Okay.
So yeah.
We should skip this pair for now.
Yeah.
We-
Yeah. It's more of a 50-50. The sells have their potential, the buys also have their potential. So in cases like this, it's best to just stay safe.
Okay, got it.
Yeah.
Can you take it up to the trap? Not take it up, but when it comes up to the trap and he's gonna try to come down, fail to come down, then take it up.
Where are you? This one?
Yeah, that one. Yeah. You don't do anything for now because I'm seeing that it touched the MAs. It's gonna try to come down, and then when it maybe come up first, the buyer will try with the volume and everything. The seller fails to come down from the release area, and I mean when. Just a minute. It comes up to here. It comes down. Maybe. Here fails to go down. From here you can take it up. It would be like in the bigger boy, this could be like a primary and this could be the secondary for the seller, and from here maybe take it up or something, depending on if this comes up and the seller will try to come down, not make it fail.
Okay. So this one, like your primary, and then wait for this as your secondary.
Yeah.
Okay. So to do that, you need to check, right, on the 240 if you have a primary secondary situation. So in this case, for primary secondary buy situation, right, we need to make sure we are following the trend. So on the 240, we're not in uptrend, we're still going down. So any primary secondary situation is for the sell side.
Yeah, for now, but I'm thinking I have this area here that could be interesting. Seeing this, if you see all this uptrend here, you're coming down, killing these buyers.
Mm-hmm.
This would be the on move for the sellers.
Mm-hmm.
And now they are trying to come to an area where they can take it down and fail. This would be the primary for the bigger buyer,
All right.
secondary.
Yeah, but we need to see which bigger buyers it's coming from. So in this case, we have to, because on the 240,
it's sellers still.
yeah, my chart is not loading. Hold on. One second. All right. On the 240, it's sellers still. Yep. So this situation, primary, secondary, and launch, we can only use stuff like that if we are following a trend, right? Or a downtrend, pulls back, primary, secondary, launch. So here, it's all in seller's territory.
Yeah, it's too early for it now. You don't do anything. You just see when it's done with its move.
Yep.
Because if you go up the time frame, it's an interesting area where you can take a buy, but you won't do it. You just wait until the seller does its job.
Yep. So what I'm trying to say is on the daily time frame, you have the situation, right? No, not too much slowdown. And then here it comes down to the 50 MA. 50 MA, and then when we were looking at the 60-minute, we do have high volume there. So what we're trying to do right now is trying to go with this temporary flow, okay? And then trying to do a primary like that. So this uptrend's primary.
Yeah.
Okay.
But this also, I'm seeing in that this also can be the primary for this seller. You know, it's making lower lows, lower highs from here.
Yeah, it can be. It can be. So,
but I'm seeing also that this came up very much. If you see this like a range, and this should be the tries from the sellers. This should be their on move, not making it. The buys could come up to here. That is a lot. This could scare the sellers, I'm thinking. And you have the volume on your side also.
So let me try and clear this up for you. This sell here, right? So we start with this push as it comes down. We are worried that we want to see where it could refresh. All right. So where this sell could refresh is when buyers step in. Right. So if buyers step in, could that have already been a small little primary or that? So all this is showing, we already have buyers along the way. And they all tried their so-called primary and kept failing.
Yeah.
So in that case, all right, considering this as a primary is only valid if we go on one more time frame higher. So one more time frame higher, this is what we see. The fact that this is the sell that you're looking at. They'll go up, not much slowdown, touching the 50 MA, and then the higher time frame primary comes in, something like that.
Yeah.
So we can go on with this higher and higher and higher, and then we always belong to something else, right? This thing could belong to something else where it's doing a primary. So we can keep going on with this, but it's just going to get more confusing as we go higher time frame. So the only thing that we can resort to, or at least look at it more safely, is just to assume, it's just to look at where traps are. So in this case, 240, we know we are in a downtrend, right? We know this is an SNR. On the 60, we know there's a trap here. So we just want to see, what can I do between this and this? Then you get your trade in within this zone here if it's safe, and then just leave the trade alone. And then until a higher time frame has a clear picture, and then you follow that. Otherwise, we will be jumping onto time frame over and over and over again.
Yeah, you just decide, as you said, only this level, your time frame, and if you let's say you decide to take a sell, you just see if that's safe or not. Then you go to your bigger boy just to see if that's safe or not, and you stop there.
Yeah.
If it's safe for now, let's take it, and that's all. For now, if you see this, it's not safe, not up and not down either. You just want to wait to see it resolve.
Yeah.
Yeah.
Otherwise, if the situation is a little bit different, where the 240 and the 20 MA on the higher time frame is up there, when we go to the 240, then the buys like that would be much safer. And then you can, then that's a no-brainer kind of situation.
Yeah, you just see if you're in your trading time frame, if that move is safe or not.
Yeah.
Depending on volume, makes on all that, and that's it. Yeah. Okay.
Yeah.
Okay. Thanks, Lucas.
So it's sort of like this USD yen, right? When we were talking about this again yesterday with Naveen on the higher time frame, remember when we were saying this could be the primary and secondary kind of situation going on the daily time frame.
Yeah.
But if I'm not aware of the fact that it's that, and I'm just looking at this this 1 hour time frame, if we do breach up, if we do go up and give us a retest, it's still gonna be a buy. What the higher time frame does is it opens the door for us to hold the trade a lot longer. So if I'm not aware of the higher time frame, maybe if I do the buy here and I'll just exit here, which can also give me a 1.5 hour, 2 hour trade. Or if I'm aware of what the higher time frame is doing, then maybe I can target here or up there. Yeah. So what I'm trying to say is, when a trade sets up on the 60, where we have learned the past 3 weeks, the higher time frame might be kicking in. So in this case, like the classic kind of trade that sets up, without even going to the 240, it's the 240 doing its on situation. So you just need to know when is it safe to take the trade, and then usually during that time, the higher time frame is trying to do something with the same direction.
That was you mentioned open the door. Can we talk about that when the door is open?
So it's cases like this. Let's say if we go up, if I'm not aware of the higher time frame, I'll just be looking at this huge range and then trying to look for a release. That's all. Okay. But if I'm aware of what the daily is trying to do, the fact that this is the primary and this is the secondary, then the buys shouldn't just stop here, right? It can go all the way up towards at least this zone here, where this is your P and your S situation.
So already when the secondary is on the way, there's it's there where you can say it's the door is open.
Yeah.
And we talked about the candle close also. Naveen talked about that also. So the candle close on the daily, that's important.
Yeah, it just has to close higher than this to make sure the buys are on.
Yeah, it's gonna close on the daily.
Yeah.
To make sure it's
Yeah. So not stuff like this where it was red at one point, came back up. If it closes up there, then if it closes up there on this time frame, on the daily time frame, it shows strength. But on the flip side, you also know if it closes up there, it just means on your 60-minute, right? That it could just be this situation like that.
Yeah.
On the 60-minute. Then on the next day, this day, you're just waiting for this to go up.
Okay.
Yeah.
So you don't need to wait for the daily to be on. On the on move, you can already assume the door is open on the secondary.
What do you mean?
When the door is open on, let's say on the on move from the daily, then you know, okay, the door is open. It's going that way.
Yeah.
But when the daily does its primary, then it comes and it is on the secondary, on its way on the secondary.
Mm-hmm.
Then you can also say the door is open, or you just wait for the on move to say the door is open.
Usually the on move is when doors are open.
Okay.
Yeah.
Then it's confirmed, like, okay, it is on this way. Yeah.
So when doors are open, it just changes the fact on where you want to exit. That's all. So in this case, let's say we're pulling back, coming to a 240 refresh area for their primary. Let's say if this is secondary, let's say this is your on move, right? If that's your on move, we are expecting price to come to its recent low.
Yeah.
But if you're not really aware of the higher time frame, or if you don't care about the higher time frame, this is already something to be expected. The on move just means it has higher chance of, sorry, not on move, the doors open move just means it has higher chance of traveling further. That's all. So this is like the expectation for this move. But if doors are open, then it can try to get towards areas like this. Same like this. This is the expected one. But if doors are open, then it has the potential of going up there.
Okay.
Yeah. Williams?
Just want to ask, can the on face come as high as the secondary?
Yeah. What about the on and secondary?
I said, can the the pullback coming back, can it come as high as the secondary level?
As high as the secondary?
With low volume or?
No, it depends. So in this case, all right, we still want to use the same idea of these guys are the guys that got trapped and they want to get out there because they bought there. So if it does stretches all the way up there, then they're not really trapped then because they're not really releasing their position.
All right, thank you.
Yeah, no worries. Okay. Yeah, today I don't have much either. If you guys are looking at anything, let me know. Eric?
Watching.
Oh yeah, Williams, I can go ahead first.
No, I don't have much. I'm just watching card groups. So what I do later.
Okay. Eric?
I was on mute. Yeah, I'm looking at a pair, but I don't think it's ready yet. It's Aussie Swiss franc. Just got some question on this. Actually, this one is very similar to, I think, to the others Swiss franc group, Swiss franc pair. I think it's British pound Swiss franc pair.
Yeah,
it's very similar.
Yep.
Yeah, the one we were just looking at. But this one, I think, yeah, it's actually the same issue. We have the wallet is not really on our side, but yeah, it's I think overall I'm looking at the sell. But at this moment, because we got volume here, and then I remember we have some volume there and there. So if we want to sell, I'm basically looking at this level needs to be taken out. So, or I'm thinking, would it be okay for it to pull deeper? Then we have like maybe in New York, hopefully. We've got good volume and everything like that, and then maybe take the price down to that area. I'm not quite sure about this because I also see, like, you see high volume here. Now, if we look at price action, the last seller was sitting here. He's already out, right? So now this one is the release, and this one should go if the buyer is still intact. But if this one failed, then I think the sell is on.
Yep. Very good. So that's right. You have this zone here. Now, if we're looking for a sell, we know this guy is taken out.
Yeah.
This guy is taken out.
Yeah.
So these are the last attempts area before getting killed.
Yeah.
So if you're looking for a sell there, that sell again will be a little bit risky because if these guys are all trapped with high volume, you would expect a release from there.
Release, right?
But if if that fails, let's say if it goes up, comes down, if that fails, it all just means that on another higher time frame, this is your primary and secondary, and then if it does go well, transfers your volume for the sell like that.
Yeah, because I'm not quite sure if I'm reading this right. I went all the way up, I think it's to the daily. It looks like the daily just finished the secondary and is about to start its own move.
Okay, actually. Oh yeah.
So I don't know if I'm reading this right or not, because it looks like kind of like a little range there already, and that's basically my last buyer. And now this basically take those guys out, and this one is basically testing that area or whatever area. So it has the potential to go.
Yep. So it's we cannot really read the primary secondary here because even if the primary secondary all just range resolve down, then you would think of a sell like that.
Yeah, and I also like this one. I think is somewhere here when it came down.
Yeah. So I think that's fine. You just have to make sure when you're on the 60, everything is ready.
Yeah, it's just the volume ahead is a concern. It's too much volume.
Yeah. So that kind of volume, like pound Swiss that we were talking about, it might be a faker. Not sure. Not too sure.
Right. Yeah, because yesterday I was looking at this pair, but I was was trying to buy this because yesterday, when at that point, I think in the morning I was looking at all the EMAs and everything. It looks like it has got the potential for a buy, just short-term buy, to take to that area. But then when I look at, I'm not quite sure if this is a valid buy. I didn't trade this because I was not around in New York. So yeah, we because after that we do have a kill with this guy, and then it tested that area. So but we do have volume over here. Is that safe to buy from there? We do have volume behind us though.
Just based on what you drew, they're all fine. Based on this, based on this, based on this. Here I'm not sure if they're in control because we sort of got above him. So just based on volume and trap, it's fine. It's just that you need to see, like, we're in a downtrend still and we have to go back quite high. So that's where it's not so safe. Especially if you just go one time frame higher and see that we are at a range low situation, then not really.
That's
not
true.
really safe. Yep.
That's true. Yeah.
So the thing that always gives away how safe the trade is just looking at what this is.
Yeah.
Yeah. Usually I wouldn't think twice if the trap sets up with the same direction, then it's fine.
Yeah, exactly. Yeah, because can we go back to the 4 hour? I think that's a very interesting way to look at it. Because when you look at, so it is the trap there. Yeah, because when I was looking at the EMA, you see this one comes really hard. So it was not touching the 50 yet. So I was thinking maybe there's a chance to buy from here to there.
Yeah,
I was thinking that.
Yeah.
So but if we are looking at this as a range, then it's risky.
Yeah.
It can react from there. I think.
Yeah, you just have to just on the 60, just squeeze the chart a little bit just to see where this is coming from.
Okay.
Yeah. So just based on the classical stuff, the guy who started, volume, traps, it's all good. It's just not really the right location.
Okay. Thank you.
Yeah, no problem. All right. What else do I have? Today I have CAD yen and dollar yen. Okay, dollar yen, you guys should know what we're looking for. Then I have CAD yen. So CAD yen again is from a higher time frame. What I'm seeing here is this situation. Push, cells come down to a logical area, a trap at least, release zones, range, might be a primary, might be a secondary, but whatever I call this, it doesn't matter so much, right? Because I have a trap, a range with volume that resolve up in an uptrend. So this right here would be an area for us to think of a buy, with the volume coming down. Okay, going back to the 60. What I do see here is we have a lot of volume at the bottom, huge ton of volume. We're pretty much squeezing like a flag. What I'm waiting for is a resolve up and a slow pullback for the buys like that. This is pretty much correlating with USD yen. However, I like USD yen a little bit more because there are a few things I'm checking also. Let's say for CAD yen, if I'm trying to do for a buy on the 60-minute, we're still very much in a downtrend. So if I go to 240, the thing that I'm seeing here is we have proper slowdown, and we are coming above the 20 MA, which could mean that these sellers, they might just want to do a refresh. That could be a situation. So on this pair, what I'm betting on is trying to do this buy, trying to bet on the sell will fail and this buy can resolve up, which is extremely risky, which is also why I'm leaning more towards USD yen. The buy there makes a little bit more sense as opposed to buying this one. Okay, so this is just a correlated pair I'm looking at. Ultimately, I'm still leaning towards USD yen for the resolve up, pullback to buy. Okay, any questions?
Lucas, I have a question on the Canadian yen.
Yep.
You just showed. Yeah, I think it's the same question that I had just now. If we go back to the 1 hour, please. But it's about the volume. Okay, so we have volume somewhere there, that high volume. And then, but we don't really have a good volume here. So there's no volume from the guy who started it. And now we have this huge chunk below us with good volume. Because I was thinking, does the price needs to take him out, or it just touched that? Then if it pulls back slowly, I can buy already.
So in this case, you want to perhaps use some logic here. So the situation is you have this wall, the higher one, and the lower one. So the constant question you always want to ask yourself is which wall is gonna hold price and which wall is gonna just let price through. So in this situation, first thing is you have a lot more volume, you have a lot more congestion. That's one. And then the second thing is this is not just any kind of range forming out of nowhere. It's forming at an area on the higher time frame, which is a release zone for the higher time frame. So in that sense, there's a higher probability where this area here might not cause too much problem.
Right.
And this whole zone would hold price.
Yeah. So the question is, so even though that one, that basically that was not last leg, right? So if we are looking at the last leg, it was here. So even though the volume area is there, because what confuses me is that it happens to be like the same area as the last guy who started it. So I was thinking, does that volume belongs to him? So we still consider, right? So we still consider there can be a wall there because there's volume here.
Yeah, it can still be there. Yeah, it's just how strong this is versus how strong the bottom one is.
Yeah.
And fortunately for the bottom one, it has a better range, and then it's coming from a daily level.
Right.
Yeah, so which gives the bottom one a lot more power to push price through. Yeah. So it's just in this case where it might continue to push up because of the higher time frame. Otherwise, it's not always a safe thing to do because higher time frame might do this to resume the down. Yeah.
Refresh. Yeah. Okay. Thank you.
Yep, no problem.
On the 240. if that candle closes, the current one, if it closes like that, can we already say that the seller is filled because it kind of already touched the 20, or it's too small?
I think it's too small.
All right.
Yeah. Yeah. We want to see. Yeah, I know what you mean. So if we consider this like that, and then this one touches, it might be a refresh. But to know if it's a refresh or not, you want to see if buyers actually stepped in. So where would we think of the buy is where the buys could be coming in. So in this case, if we're just strictly looking at this, I'm not sure if anyone thinks the range has been broken through and they're starting to do the buys. So here it feels more logical that, okay, I think, most of us would agree at least that it's a break now and the buys could happen there. Hence, then the 240 guys think, okay, I'm ready for the sell.
Makes sense. Makes sense.
So with this pair, we could potentially be those buyers that get trapped for the 240 to sell.
Yeah.
If we were, that's why you like the USD.
Yeah.
Okay.
So it could be a cat thing that messes this one up.
And then I had a question on CAD Swiss.
All right, CAD Swiss.
Again, is much better.
So I just had a question in regards to the higher time frame. If this sell did set up right, and we had good volume and something like this happened, if we go to the 240, we can see that it hit the 50 and then it would be in an on phase at that point.
Mm-hmm.
But if you go to the daily, the daily is just a big mess, and it's in a money spot and it's in a nice location for the sell. So what would we do for this case?
So when I look at the daily, then things are a lot more messy. But if I'm solely looking at just this view here, I'm able to see this piece, right? This thing that broke through, and if I'm assuming that we are going up like that, this might be the higher time frame pulling back for their, main primary, which is on the daily, and then maybe a secondary from there. Not quite sure for this one, but the situation here is this is the seller. They all tried. If we resolve up, pull back here, might give us a chance for this thing to push through, assuming that we're still in an uptrend like that. So in this case, your worry could be, if we're trying to do this buy, are we counter trending the daily time frame? If we're trying to do the buys from there. So if I go to the daily and see if I'm actually counter trending anything, then it's not really counter trending the buys. Or if I'm trying to do a sell, I'm not really counter trending the sells. So the daily time frame isn't telling us much regarding the trend. So the only thing we can do during situations like that is just use the traps that we have on the lower time frame to take trades from one level to the next. So in this case, you have this. Right now, at least, you have this, and then taking it up towards here. So this is situations where the doors are not on because you don't have a trend going on a higher time frame to tell you that it's refresh, it's secondary, it's trying to go situation. It's just the fact that you have a trap, you have a potential release zone, you have volume, it's going to release, and then you take this conservatively towards this high or that high. That's all.
Got it.
So same situation, let's say if we go down like that, well, you don't really want to do the sells too quickly too because of the volume here. Yeah. Yeah, does that answer your question regarding the higher time frame? If it's not showing a trend, then all you can do is on a 60-minute, just make sure you're taking it from one level to the next. That's all.
Yeah, this one's really messy, but when I was like doing analysis, I kind of noticed on higher time frames it didn't really say much, so I didn't know whether to just disregard it or not. So yeah, that makes sense.
Yeah, you can still trade it. So it's more so like the second week of knowledge that you guys have before we went into the MA stuff. So this is the stuff where the MAs don't tell us much, so you can still just take your release trade like that.
All right, thank you.
Yeah, no problem. All right, then you use whatever we have learned with the volume from this piece towards this piece. Okay, it's here, it's here, it's here. Now it's all transferred up. So then you're worried about, is this gonna cause me problem? Maybe, I don't know. So let's wait for this pullback. If this pullback on the lower time frame has no volume up there, highest volume down here, then I still might have a chance of taking this trade towards recent high.
Yeah.
That kind of thing. Yep. All right. I think Casey raised your hand just now, right?
Yeah, it wasn't really anything. I just was trying to put it away and raised it. No question on this one.
Okay. All right. Let's take 5 and then let's come back with solving some confusions from yesterday, if there is any.
Right.
All right.
Perfect.
Lucas,
Yep.
I just want to ask, because yesterday I saw Navin actually already mentioned something that he has mentioned before, like struggle and kill. When he wanted to say the other party come in. But when he draw, I realized that sometimes we don't need to kill the guy who started. I'm not sure if that's important or not sometimes,
Yep. Let's start with that then. Okay. So okay, I think we put that into context. We put that into, let's say, the secondary piece. So remember before I was saying, let's say we're at this kind of situation and this, first of all, is everyone back?
Yeah.
Yeah?
Yeah.
All right. All right. So let's put that into context. So primary and then secondary. Remember when I was saying primary and secondary, when you try to sell the secondary, for me personally, I don't really like it that much because these guys may react. Right? And then Naveen came in yesterday and sell the damn secondary because it can do this. Right? So that's something that I'm pretty sure you guys are confused right now. So generally that's the case if this guy has volume and this guy has volume. That's where things, when I sell the secondary, this piece gets a little bit tricky because it can bounce again. I think that's why, I think at one point he was saying, if you do sell this, depending on what this piece are doing, you want to take action there just in case it can bounce up. He was talking about the health and the power of how this thing pushes up.
Right.
Yeah. And so the difference between this and the on phase, it's just that this one definitely doesn't have as much potential as secondary because we know this one is definitely gonna stop here. Now, the reason why I like this a little bit more is because the way I trade is I generally have a set take profit in. So I have a clear idea where I want to get out. That's where primary sometimes suits me a little bit more. But doesn't mean it's right or wrong. Because over the years, Naveen has taught us a lot of different styles, but they're all based on the same thing. So I just use what makes sense for me. So in this case, primary is good because at least it has a clear exit. But this has the potential of opening the doors where if you do get in there, it might stop here or might not, or it might just crash all the way down. And then you wait for the on phase from there. So this is what secondary is good for. It has a possibility of just crashing through everything. That's where secondary is a little bit better than primary. Okay. And then the other thing I remember was someone was asking, do we need a level here? Right? To sell
Yeah, I was asking. Yes, I was asking.
Yeah. So do we need a level there? Generally speaking, the reason why in the beginning I said, yeah, try to look for a level there on the 5 is because on the 5, at least you have a reference point on where you can fade the pullback to. So
that's true.
Yeah. So if it goes up like that, and it slows down and then you get in, that's fine. You know, even though your level is there and you're not really there, it's fine to get in there, provided if there's volume, markets are opening at this point in time, and all that kind of stuff. But just, in this case, there might be a chance where price can spike up there once more to test the release zone and then go back down from there. So it all comes down to how aggressive you want to be, how strict and how rule based you want to be. So
Yeah.
the reason why I say try to look for a level is because you have a clear area on where you know you can be wrong, because this is the point where it should go. If it comes up again, you don't want to keep selling it. But in this case, if you sell it a little bit lower, then there is a possibility where you have to sell it again up around this zone here. So again, going back to the reason why is because I am not so good at re-entering trades after taking a loss, because sometimes it feels like I'm revenge trading. Hence, I prefer to know where price may pull back to and then just get in from there.
Yeah.
Okay, so that's another one. And then going back to Dennis, you were asking about the slowdown. So let's say here, right? So extract this out. You have a say level. If it goes up, if you're already at, let's say, a good level or a good release zone, I think he was drawing something like that and then just selling it like that. So this sell would be okay if you have high volume, you have a small range forming, and then just taking the sell like that. Otherwise, you just take out the guy who started. Either way, as long as you have volume behind you, then it's all fine. So that's where the slowdown could, just create a small range for you to sell the retest on. That slowdown, even though if the guy who started is here. I think some of you guys took trades like this before during the unicorn program, right? So if you have volume here, you have small little range there, which is the slowdown we were talking about, then yeah, that's fine. That's still pretty much what we are looking at to sell.
Yeah, providing we don't really have a big volume over there.
Yeah, providing we don't have volume over there. So remember when I was saying, if you have a 60-minute zone where you're convinced that it's going to release there, or 5-minute is pulling back towards that zone, and then it's slowing down and then have high volume, that's the piece where it can be a very, you can get loose there, as in you don't need to be too strict there. As long as you're at the level on your higher time frame and you have volume behind you on the 5, yeah, you can just continue the sales from there. Shouldn't be too much of an issue. All right. So just one more thing that I remember of, which you guys may be confused, is 15 or the 5.
I was about to ask you that. I like the 5. I'm used to the 5 now,
Yeah. Again, it was before this when he was coaching me on looking at this type of stuff. We were looking at it on the 5, and then someone on the team started to look at too many details. Hence, we resort back to the 15. Now there isn't much difference here. Now the 5, the only problem that you may have on the 5 is situations like this. So on the 15, on the 5, obviously there's a lot more data, right? So we're looking at bigger swings. So that kill is a kill that has a swing involved. It's just that on the 15, we're just looking at the same thing, but it's just one candle and then another candle up and then another candle closing down below, situations like that. So there isn't much difference in terms of the logic and technical analysis side of stuff. It's just how you are able to adapt with looking at swings. If we're looking at the 5, we want to see a clear swing up, swing down to kill, and then taking the sell from there. Otherwise, on the 15, it may just look like 3 candles up and then one candle coming down, which is still a sell if we're looking at the 60-15. So they both are pretty much the same thing. It's just which one you guys prefer. That's all.
Yeah. Yeah, I've gotten caught up in the small moves on the 5. I took a trade Monday that I think I did that on. The little detailed on the 5 got me.
Yeah. So the problem, I think the problem is when on the 5 we look at the small details there. Then, that will cause problem. So if you're on the 5, then you have to make sure it's at least like 2-3 candles up, and then like 1-2 candles down. So there's some swings involved. Yeah.
Okay. Yeah.
Yeah. That's when the wind sort of shifted back to, instead of 5, let's just use 15. So, but if you're able to adapt to the 5, then it's fine, or the 15 is fine too.
Isn't it better risk to reward if you take the 5 with your stops and everything?
It's the same. So let's say this uptrend is this one here. Let's say this is the kill. Let's say it closed lower, right? Let's say this is the kill. You're still gonna get the next green candle to just hit it like that to sell, which means your entry will be here, your stops will be here, which is the same thing. I don't think one is better than the other. I think
but if you make the kill and the on move on the 5 is, let's say you make the kill, this is the on move, you would put your stop here above the trap, the last buyers that tried here.
Yeah.
Instead of here.
So in this case, your stops will be here because this is the last try. But let's just say if it's like that, then your stops will be here.
Last try. You take the last try. Yeah.
In this case, it would just be this one, then this one, like that, and all the small holes. It's pretty much the same thing. And you get in there, stops here.
Yeah, so you're looking for more swings on the 5 and kind of more candle-ish sheep on the 15.
Yeah. That's so far what I can remember. That may confuse the hell out of you guys today. Going back to Dennis, did I answer your question on the slowdown and the kill? So if you have a slowdown on the 5, it's just a range where we would usually take the sell also, if there's volume and all. Dennis?
Yeah.
No? Okay. Any other question?
I had one on like primary, kind of the primary where it begins kind of thing. Let me find my drawer annotator. So what I kind of noticed, pull back, refresh. I'm just trying to read my notes.
Oh, sure.
So if we're kind of in a downtrend, and then we're looking for when is this seller going to give up, right? We need buyers to come in to take the sell, correct? That's our logic.
Yep.
So we're going down, nothing yet. Still no buyer. We try again, and then possibly, okay, we don't necessarily, nobody's bought yet, but it's definitely making the buyers get enticed, right? Is my logic. And then this is where actual people would try to buy, which makes this our primary.
Mm-hmm.
Am I looking at that correctly?
Yep.
Okay, my question is, if we have something, I guess, similar, and this comes up and keeps doing this and then starts to go down, does it go to a higher time frame? I kind of heard Naveen say that could be a higher time frame.
Yep.
And that could be their primary, because this should be our time frame primary. Is that logic correct?
Yes. This is the one Maya asked about regarding the because when Naveen was drawing, his pattern was a little bit different than how we used to draw it here. Something like that. But yeah, this goes. Start with this one. This goes back to the idea of this is a trap, this is a release right here, and based on the trend, is that really safe or not? Blah 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 blah. And then there's situations like this, right? When we go up, let's say this one, that it continues to go up, and let's say it does that and then goes down, something like that. Generally, not generally, but in the last few days, I would just say maybe on this higher time frame could be a primary and secondary situations like that. So the whole reason for that is I just want to make sure that we are able to look at this piece to
identify.
To just sell this piece, whatever this is. All we know is this is more than safe to take
on phase. Okay.
Yeah. So here, what you're saying is correct as well, and you picked up from what Naveen said yesterday. This is ideally, let's say, 60-minute the refresh area, all right, to do that primary, and they immediately fail. If they immediately fail, it's where we go up one more time frame, 240, to check what this is. So in that case, what you may have is just this. So this piece, if I draw it on the 240, you may have a downtrend, a slight slowdown, goes up, primary, which is the 240 primary, and he tries, fails, and then you're on. Either you take the sell from here, or you wait for a pullback for the on to go down. And in here, it will all just mean this.
That'll be that.
Yeah, it would be this in this case. It would just be this piece. So
it just belongs to the higher time frame.
Yeah, it just belongs to the higher time frame.
Okay. Yeah, I was getting kind of confused on like how many legs should be on the pullback. If there's versus the primary, how many legs? If we get too many legs, then it just reverts to a higher time frame.
Yeah. So that situation is like pound Swiss. So pound Swiss, okay. Say we were just looking at the 60, or going down. Last guy got killed and invited buyers to come in after the kill, right? So these are potential buyers stepping in. So on this time frame alone, 60-minute, this is your primary to go down. If this thing fails, then that's your secondary, and then you take the on from there. Okay, so this primary fails, continues to go up. So this piece it just means that on a higher time frame, if I just mark that area out to the 240, it just means the same area at the 50 MA. So it comes back to the same thing, sort of, where on a higher time frame, they may started to refresh from here to here, and this is their primary. And if this thing fails, then it can go down. You're on from there. All right. But the end of the day, the same we still want to execute the same thing on our 60-minute time frame, where we just need to have someone being trapped on the upper side of stuff, and then this to sell.
Gotcha.
Yeah. So at that point, if we go back to the higher time frame, if this thing does go up there and then slams down, it might just be, the 240 or even the daily's primary and daily secondary situation.
Gotcha. I can see how you can get almost too wrapped up in the primary secondary and miss the, hey, there's a trap here. It's time to take this trade.
Yeah.
Kind of thing. At least for me, it seems like I could get lost in it pretty easily.
Yeah. So it's all the same thing. It all comes down to how you want to use it. That's why a few days ago when you guys were asking me about how I scan through the charts, I'll just look for a trap, and then I'll check the story from there, seeing if it's counter trending or if it belongs to a higher time frame, all that kind of stuff.
Yeah.
Lucas, I have a question regarding taking the trade for primary, secondary, or longs. Because I remember I've been watching this one-on-one videos in Elite. I found for some of the students, Naveen told them not to touch secondary because the secondary is risky. It can take out primary, and then for some of the students, I remember at least two one-on-ones. Naveen actually asked them to do the primary, and I think the primary I've tried. I think the difficult part for primary is that sometimes it's really happen really fast, and I don't really have that little trap on the 5 minutes and just left.
Yeah.
So is that what you experience as well?
Yeah. So you've seen before. Sometimes Naveen say do more primaries, and sometimes he say do more secondary. It goes back to what I was saying earlier. They all have their different
trading styles.
Yeah.
Right.
And like you said, sometimes primary can leave really quick, and that's normal. That's normal.
Right. Okay. Yeah.
So if it does leave really quick, all you can do is just look for an area on the 5 to see if you can sell it.
Okay. Yeah, and also I remember this one video Naveen was talking about. There's a difference when you, let's say we are taking a sell, right? So there's a difference when you are selling primary versus selling the on phase. And I remember he said when you are selling the on phase in lower time frame, it happens really fast. It doesn't really give you a like deeper pullback or test. It could just like view formation and then just go. But for the primary or secondary, it can be slower. Can give you like deeper test, that kind of scenario. So yeah.
So that part is more so for. Do I have an example? No, I can't really think of. But it's more so of the one that we were talking about earlier. Say primary, secondary, fails on, and then go. Remember on the other day I was saying, know which piece of the story you're in. So let's say this is the 5, the lower time frame. Just assume that this comes down. He's talking about stuff like this. So if you stall here, this is like you get in there. Then if the trend on the 5 minutes stops, then this is your next piece. So this is where he was saying, okay, it's on now. You are not expecting this to happen here. You're just expecting one candle pullback to get in on this on phase.
On that piece. Yeah, on this on phase. Right. I see. Okay.
Yeah. So this is like the next leg kind of situation.
Yeah. Okay.
Yeah.
Sure.
All right. Ian.
Yes, regarding the primary, if you delete here and remain in order to me to draw. Let's say,
Which one?
all.
Okay.
If we have a trend, let's say this kind of trend, and we want to catch the primary, we have something like this. Maybe it's not. Here, maybe. Here, maybe. Here, maybe. How long will we go, and how will go with the on the higher time frame? The last guy who started it on this time frame is here.
Mm-hmm.
So we guess this is the primary, this is the primary, this is the primary, this is the primary.
For the cell?
Yes, and let's say this is the 60.
Okay, so
on how much, on which higher time frame we should look in this case now?
To know which one is to know where a refresh can come in.
This is the primary, yes, if it is the primary or not, or yes, something like this.
Okay, so it's pretty simple. If this is the 60, you from the first week's lesson, you just need to know on this guy's push where a trap can be formed. The whole idea of a trap is to get opposite party to come in and then for a refresh. So what I mean here is, if this thing goes down, let's say if he kills that guy, obviously everyone is trapped here, right? When everyone is trapped, this buy here could be risky because these are the primary. So to answer your question, it's when you have a trap form. So let me clear it out. So the same goes for this. If you have a lot of slowdown, reach up. Obviously,
Yes.
all these guys are trapped, right?
Right.
So we would logically think of a release, but if it's a downtrend, then we would think twice, right? Because it's in a downtrend.
Yes.
So in this case, then this guy doesn't really need to be taken out because this could be a primary if we are counter trending.
Yeah.
So it's not too much about going up a time frame to know if a refresh can happen. You would know a refresh may happen if you're counter trending. Counter trending when obviously when you have a trap form. That's the quickest way to know if a refresh could come in. I don't think I answered the question really well, but do you understand what I mean?
Yes, but this is the refresh from continuation. Okay.
Yeah.
And this could be a refresh for a trend, or what Navin said in one-on-one's training. There is two kinds of refreshes here, and yeah, we should go with the trend now. In this case, in both cases.
So in this case, this would just be your primary, and then if the secondary fails and go up, failing this refresh, where this refresh ideally should have continued and failed, then it's something for a higher time frame.
If we take this guy who started it.
It's not really about taking this guy out.
No?
It's about this primary and secondary that fails. That fails to go down. Instead it went back up. So it's stuff like this. So if there's a range, reaches up, everyone thinks it's a buy. These guys think it's a primary sell. They sell, fail immediately. Okay, it's at this point, it could be a refresh for a higher time frame. And then on the higher time frame, this is a primary, and then they sell and fail immediately. All right, one more time frame higher.
Okay. I wanted to be sure about this. This is why I asked.
Yeah.
Okay, so in the case I've drawn, we should go 2 or 3 time frames higher, because we have here the primary 1, primary 2, for 2 higher, 3.
Yep. So
yeah.
Yes. So in cases like this, again, it doesn't neglect the fact that you would still be looking for this situation. So let me try and erase this. Let's say it does go a lot, many time frames higher.
Yeah.
You would still be looking for a safe trade where a range has formed, pull back for a release.
Okay, only for traps. Okay.
Because now here's why, right? Because if you take this sell on a 60-minute and you know that this is a huge pullback on a higher time frame, it can be a higher time frame primary coming in. All this can just mean on a higher time frame pulls back, you're just purely selling the higher time frame primary. That's all. You're just doing it on the 60 here, which might just be here.
Understood.
Yeah. So yeah, I just don't want you guys to get too hung up on coming up too many time frames, but just knowing the fact that this situation, this trap, this release in a downtrend might just mean on a higher time frame you're just selling with the flow, which is all that matters. You're with the flow and you're trading off a release zone, and that just could well be a higher time frame primary. That's all.
Okay, thank you very much. And I have another question.
Yep.
Can we see the volume plus setup on your chart, the settings?
Okay, sure.
Well, because I didn't find this. Is volume plus? Okay, but from where? Can we start to put it on a new chart?
So it's called this one.
By time of day. Okay, I put it, but it does not seem to be the same on my chart. Volume plus. Volume plus, yeah. Okay.
And then the settings are these.
32, yeah, traffic. Yeah, I have something similar, but why doesn't it's market of Forex? I have to choose here that inputs market Forex or crypto or futures, which is at you is not.
Yeah, I think mine is not updated. You can just use Forex.
Okay.
Yep. The other are all default.
Okay, thank you very much.
Yep, no problem.
I have a question about the secondary.
Yep, go ahead.
For the secondaries, in order to attempt it, does it have to be based on the level on the 60, or we just need that refresh?
This one?
Yeah.
No. Sometimes it doesn't really come off. Can you repeat your question?
Yeah, because I know in order to attempt trades, we should have a level on the 60 to work with. But when these secondaries come in, we don't always have a level to the left to work with.
Yeah.
So I want to know if it's fine if we don't have a level.
Yeah, sometimes the primary itself doesn't really come from a level on the left. If it does, then you would be thinking of the primary sell. But if it doesn't, and you're doing this, all you can still take the trade, provided that there's high volume here, no volume there, high volume here, and that's fine.
All right.
Yeah.
All right.
And this piece here, again, it's just personal preference. I like to see at least someone being trapped on my precision time frame, so I know approximately, where things can pull back to.
Yep. All right, thanks.
Yep, no problem. Okay. Any other questions from yesterday? Is it all good now?
Yeah. Naveen talked about the logic behind it. He said, I can show you a million patterns, but if you know the logic behind it, and I'm going to go back and watch his video some more, but that logic is basically, if you're like, we're trying to see when the buyers are dying to get back in on the overall flow. That's the logic. And the logic is you want to basically see when your buyers come in and then when they die. That's basically what he was getting at, correct?
Yeah.
Because it doesn't matter what pattern, the pattern can be different, but if you just think of, if you were a buyer, when you would buy, and then when you die, that's the basics of it.
Yeah.
I don't know if that drawing is correct, but I was just drawing and talking at the same time.
Yeah, well, it's right. The whole idea is just that you want to pull back and you want buyers to come in to sell. And the reason why we need buyers is because we want buyers to be trapped so we can use their release to sell.
Yeah. Okay.
And the reason why we started off learning traps is because we want to know ourselves where buyers will come in. In this case, this release zone.
Yeah.
To do for the higher time frame to resume. And then again, using the same concept of traps, that release zone for the sell.
Okay.
So this logic can unfold in, like he said, a million different styles. But as long as you get buyers to come in the overall downtrend and those buyers being trapped, then the idea of selling should be fine. The same goes for the opposite side.
Got it.
Yeah.
I had one more question. It has to do with refresh continuations, like Ian was saying. One thing I noticed is if we have a trend and then we get a refresh, we're already on like multiple legs down. So I don't know if it's too late or because we have a refresh, we're still good. So I don't know if, even though we have a refresh, if it's still late.
It depends on a few things. So let's just say this is 60, right? And you have a refresh on your 60 alone. So in this case, just this and this. If it's multiple legs towards the downside, then I would get concerned. So in that case, that's where intuition, is that the right word? Yeah, usually comes in, where you want to see if it's a 60-minute move and it has gone down for multiple legs and 60-minute has refresh. Do you really want to trust that refresh or waiting for a bigger refresh where the main 60 guy is taken out? Then, it sort of becomes a higher time frame 240 refresh situation. It's like this one here. We had a Kiwi pair that was doing something like that, right?
Yeah, I was looking at that. That's the one I had a question on.
This
looks
one.
like it's a lot of legs down, but then at the same time, it's refreshing.
Yeah. So it's like this. So let's say whole move down from here to here, right? It's already pretty extended. Well, even when I scroll towards the left, it's still, yeah. So if you zoom in, this just might be a 60-minute refresh with this guy being a little bit taken out. That sell it's not so much ideal as compared to this refresh. You see what I mean? Like the difference here, where this is clearly inviting a lot more buyers in as opposed to these kind of refresh. So if it's in a downtrend, I would prefer to have a much more substantial refresh, just so I know a lot of buyers think this is the bottom and we're gonna make tons of money buying this. And if they're all thinking like that, then the sell makes more sense to go down faster and stronger. As opposed to here, I'm not sure if enough people think that it's the bottom. Hence, if I do the sell, I'm not sure how far or how strong that release can be, just because it's so extended.
Right. And then I would try to look at the volume to see if it gave me like further confirmation. And sometimes the volume still looks good. So I'm not too sure.
Yeah, so it's like here, right? Again, the same thing, where we have sort of like this is for sure a refresh, right? Because we had clearly invited buyers in. And again, if let's say we call this push up, came back down, this might be a primary, this might be a secondary that spikes everything. That kind of situation holds, pull back to sell. Sometimes the volume would be okay, where volume is here and then this volume is here, and then as you get below, everything is behind you. You can attempt a sell like that. This was something I was looking at yesterday, but when this candle came back in with high volume, then it sort of gets too risky, because with this and the whole downtrend being so extended, then I'm not too sure anymore.
Right. Yeah.
Yeah. So ideally, it should have stopped there and resume if it's strong and on face situation. So yeah, overextended downtrend can still work, but as long as you have a good enough refresh, then it should be fine. The whole point is you want to imagine yourself as these buyers, where you think, all right, my guy who started is taken out, wherever he is, you have a range, you have high volume, that's for sure a buy. And then you stop there, and then, all right, if that's for sure a buy for someone else, it might just mean higher time frame is coming in. Then you have more conviction on trusting the fact that buyers will try to come in there, and then just wait for them to be trapped.
Yeah, thank you. That cleared up a lot. Thanks.
Oh, no problem. Yeah, Williams.
Yeah, I'm just gonna go back to the 1 hour. So I know ideally when we going back for the on face to roll over. So in case you miss the trade from here, what will you do? Do you have to keep running after it or just wait?
You can't wait anymore. The only thing you can do is just to chase price from there or here,
Okay.
as a cheese style situation.
Okay.
Yeah.
Sometime by the time we figure everything out, it's already moving. So
yeah, some trades they move in the Asia hours. So in this case, it did move in the Asia hours. And then in those situations, all you can do is just wait for the cheese. All right. Anyone have any other doubts? Should be all good now, right? We're just talking about the same thing essentially. It's just a little bit different way of presenting it. Okay. So let's go back to Aussie Cat. One last one. Lila, you were on the cell, right? So let's have a quick look at this one.
Yeah.
Okay. So I'm not going to go over the overall story, but this is an on-phase situation where cells ideally should be coming in from here to go down. Yeah. So on that day we had this, and I was concerned about this pullback again, before going down. But I was saying the cell should be okay, just based on the fact that we are still going down, and if the volume all is good, then it should be good.
Yeah.
So on the 5, walk me through again exactly what you did on this pullback phase.
I have forgotten. I don't remember really. But if I can see here, I have to admit it. Just a minute. Seeing this, let's say this is the primary, and then I have this secondary, and I think I didn't take it. I didn't know if I was supposed to take it when these 2 weeks came. Maybe this red, it closed red. I think I took it here, and I didn't know if that was chasing or not.
Okay. So where should your stops be in this phase? Let's say if you get in here.
I think my stops, I put them here or there.
Right. Why isn't it here?
Wait a minute. Because now it's from this area, it's already came down as a primary. So this above the primary, I was thinking not more than that, because it's already broke down, and these. I have a lot of tries to go up and didn't make it. It came and it tried here again and didn't make it. So it's not that necessary, I'm guessing. I think I even put it, I don't know if it was here or there. I put it.
So the logic is not so much about this is primary and secondary, that's why your stops is here. The logic is more so about this is your last seller situation, right? They all try and then resolve up, right? Resolve up. These are buyers that got trapped. So the stops is placed here or here because these guys are trapped, and this is your wall to release.
Yeah.
Yeah. So that's why you want to focus on. The stop placement is above the trap area.
And the trap area would be here.
Yeah. Because that's your last buyer attempt before being killed.
Yeah.
So in this case, I would go as far as just to get in on this area here. This is where you can potentially use a limit order to put it just at this candle low. Stops there. Now, the other thing that you had during that area is the highest volume at that point in time was
I had
here.
it behind me.
Yeah, behind you, and here.
Yeah, I had it behind me. Then I took it. I didn't dare to take it before. And then I was targeting, if you go to the left.
Yep.
I was targeting, don't die, the annotation is gone. I was targeting here, but I saw a lot of, on the 5, if you just can open it again.
Mhm.
I stopped somewhere. Yeah, this came up, and on the way I just stopped. I didn't dare. Then this came, and it made these swings. So was I supposed to wait for it to come down, or it's these areas when it just stops and I see a wick and I just go out without waiting for it, because this is an on move, and I could have waited a little bit more, or that's the part when the exit is difficult for me.
Yeah, that's the part where I wanted to talk about. So the first thing is so this is all the trading part, right? It's not so much about the story anymore. So you got the story right. Now it's more so about execution.
Yeah.
So the first thing that you need to improve on for this trade is making sure you get in here instead of here. So that makes a lot of difference. Second thing is, when I was looking at your analysis, you took too much action around this zone here.
Yeah. I always do.
Yeah. So try not to take too much action too quickly around these kind of areas, because at the end of the day, if we're on the 60, that's the target that we want to go for, this area here. So what I'll usually do is, if I'm on the 5, I have that target mark right there, and entry is here, stops are there, target is here. So you constantly want to ask yourself this question. I'm up around, what happened? Okay, again. At this point, you're up around, let's say if you get a perfect entry, right? You're up around 1.5 R. Are you ready to let this thing pull back and give back all the money, or just getting out at 1.5 R? So that decision have to be clear, because if you get out when you start feeling the risk, you're getting out at around 1 R instead of just making the call to just get out at 1.75 R. But obviously we do not know this is the bottom at that point of time. So if your target is still here, we resort back to what we have learned so far regarding the trend. So this trend goes down. Okay, overall, he's still in control. All right, all of this is just part of this guy. As long as he's not taken out, then you're fine. But obviously, we do not want price to come back all the way up there, right? So all this is going to cause concern, but these are SNRs level that you have to bet on they're going to hold. In this case, yeah, concern, a lot of concern for sure, goes down. Okay, the trend is still intact. A lot of concern for sure, again, goes down. At this stage, right? If it punches through, then you close. Otherwise, it can still resume the downtrend going down. So as it gets close to your target area, you get out there. Right? So you want to, this is the part where execution matters. You want to know how much are you willing to risk making the extra 1 R here versus, getting in here, stops here, and just getting out here.
Would I take maybe 50%? I think I started with the 80%, then I saw it was coming up a little bit more. I just closed everything. Not when it came up, but when it came down to the same area when I closed it here, the whole thing. I started taking out a lot, I think. Then I took out everything here. I just didn't want to wait. But could you say that, okay, I'm seeing that it is ranging here, but volumes and everything is still good. So I could take maybe 50 and try to go to the lower point, or what would you? I always have this issue, just going out too assume.
Yeah. So the problem there is you can only fix that problem by solving two things. The first thing is knowing where your target is. So in this case, you know for sure this is gonna hit when you sell, right? Because the pullback is weak. You have volume behind you. You get in there. This is for sure gonna hit.
Yeah.
This is hopefully it's gonna hit. Although it's an on move, but hopefully it's gonna hit. So to solve those two exit issues, you have to make sure your entry is on point enough where when it gets to your, this is like a confirmed area, like even the, this is area where you're expecting price to come down. So this kind of area, you have to at least be able to get 1 hour out of the trade. So the distance has to be at least 1 hour. So you don't need to hold on too much. If it does go through, then yeah, you can extract more profit. I think 50% is fine. Yep. 50% and then don't do much around this zone here.
Okay.
Yeah.
And practice a lot about that.
Yeah. You try focusing more on where you can target to, the most conservative area, which is here, and then try to execute as best as you can, so you don't need to be worried about all this stuff.
Okay.
All right. Yeah, Casey, I saw you post a few trades as well. You want to run through them? Any question on those pairs?
On actually real quick on this Aussie CAD, if you play it back real time, I had a quick question. Naveen was talking about, where is it? Like a refresh inside a refresh.
Yeah.
And that's kind of, this morning I was looking at, like you said, this was the on phase from here, and we're still going down. He couldn't make a lower low, that's what his job's supposed to do, right? We're supposed to go make lower lows.
Yeah.
He couldn't, and now he's coming back like another refresh inside this refresh. So that's kind of what we need to stay away from, correct? Is that what he was kind of referring to?
Yeah.
So even if this sets up perfectly somehow, we don't really want to mess with it.
No.
Okay.
So it's because of the idea of the whole idea of getting better price kind of thing. So this price cannot make lower lows. Why is this price going to make lower lows? That kind of logic, I guess.
Okay. Yeah, because that's finally it's getting a little clearer of when not to trade. Because normally, you'd see this and think, okay, it just rolled over, taking out the guy who started. Let me sell.
Yeah,
kind of thing.
Yeah.
But the whole bigger story says not to. Okay.
Yeah.
Awesome.
So, this one here, right? The easier logic to say you don't want to sell this is just looking at it as a whole range. That's one way. But if you are aware of what happened here, where this is a refresh and you're aware that it should have went, but it failed, that also tells you that I don't think the sells are going to be ready with this price.
Yeah. Okay. Perfect. Thank you. The trades I took yesterday or Monday, I think one was Aussie. Let's see which one. Aussie New Zealand was the better of the two. So this one. So what I was seeing was if you squeeze it a little, you can see a big range. Yeah, pretty substantial range with like this is the last guy who got trapped. And then now we're testing this trap. So I was kind of wanted to do a primary type, bounce, I guess, off of this areas on the lower time frame. I saw that we also had these guys trapped up here. So kind of two levels fighting between each other.
Yep.
And I was looking for entries around here on the 5.
Okay. All right, super good volume. Before that, let's go back to the 60.
Okay.
If so, primary cannot go far because someone up there is looking for a sell, right? So in this case, nearest area which could cause this problem might be here, right? These lows before resolving down.
I think that was some high volume right there too. So that was, I think, an area.
Yeah. And then you have super high volume at the bottom. Yep. So
yeah, I think I was actually targeting a little higher.
Okay.
At first.
Yeah, I would say just get out here in cases like this. Generally speaking, primary, you want to fade the move. Because you're fading a move, you want to get out much quicker.
Gotcha. Yeah. And this one, I don't like doing these trades too much, I found. I like the traps and stuff better. Well, this is a trap potentially, but for a bigger time frame.
Yeah.
So I saw this area. There's some volumes, I think, in this area. So that was kind of a concern. But then initially, I think this is where Owanda differs a little bit from FXCM chart, because if you squeeze it a little, I didn't have any of this. It was like, it just kind of stopped up here. I didn't, a lot of that's not on my chart.
Okay.
So that kind of messes with me a little bit, but it's not too bad. But I knew this was an area.
Okay. At least there's this pot, right?
Yes. Yeah, that's all the same.
Okay.
Yeah, definitely. So I was watching it come down. It's kind of unclear on the guy who started with these choppy moves. Let me go on my screen so I can remember, actually. Okay, I'm back. So yeah, I kind of marked out maybe this was a guy who started, but could it be this? It's kind of unclear, but this one was the most clear right here. So I saw that the trade before, I got caught up in small detail like this, trying to take out this guy, and it messed with me. So I wanted to be a little more sure. And I wanted to make sure this guy was taken out, or at least tested. We had tons of high volume, not much volume on the push down versus this. So who's selling down here? Initial that big trap area from the other side.
Yep.
I think we're already in it. It might be somewhere around here, actually.
Okay.
So we broke up and tested this guy who started with tons of high volume now behind us.
Yep.
I came in a little late. I was reading it around here.
Okay.
So I initially missed this.
Yep.
But I remember how Naveen, I think, was talking to Paul one time, and he was talking about if you haven't, and we've talked about it too, if you haven't really taken the guy out, you can potentially, these are pretty good trades. And if it even comes back, you can still take another trade because all your volume is behind you.
Yep.
Yeah. So spreads are horrible on this one for me. So I had a limit here, and then it filled me in way up here. I put a limit, and it finally filled me in, but way up here. So price wasn't that good. Stops were down here. And my target, I think 1R would have been around these areas for me. So I knew that would be, I wanted more, but the spread messed with me, gave me less risk to reward.
Yeah.
And then it just drug on. Time of day, I think I determined the time of day. I think my entry was around lunchtime, New York. I think that's the time of day, I believe.
Yes.
So that was the main risk on this one. I saw was just bad time of day,
Mm.
but it kind of gave me hope because the volume stayed high, which is unusual for like a Monday, New York. So I was like, maybe it's going to do something, but it just drug and drug. And I finally got tired of it and just closed it somewhere around here.
Yeah. Yeah, I would say this is a perfect trade. Well, ideally you want to get this area here. Usually what I do is just put my limit order at where last little tails or wicks are. This wick here, that situation. So this guy doesn't really need to be taken out because you pretty much have a range situation. Well, in this case, it's not a range, but what you do have is multiple highs, right? Forming a clear SNR. And it's not small, right? It's big enough to say there is an SNR there where you can use. It's not like these kind of SNRs. So whether he's taken out or not, that's fine because the ultimate thing is you have volume behind you and you're at 60-minute zone. Yeah, I think what you did was fine. It's just the spread here wasn't so good.
Yeah, I think mine's like 5 pips or something. So
that's a lot.
Yeah. Thank you, Wanda. Yeah, it's like 4.6 right now.
Yeah.
Yeah.
The spread of and there's just like killing people.
Yeah.
Like that.
Wanda spread is generally horrible, I think.
Yeah.
It's horrible. Yeah.
I may think in the future
Horrible.
getting away from Wanda. I just started with it and kept it.
Yeah. But doesn't matter so much for now as long as you know what you're trading, and I think this is a good trade. It's fine.
Okay. Awesome.
Yeah, it's a good one.
All right.
So what you might have here is situations where this could be your primary. Primary cannot go far because these guys want to sell. They sold. They cannot go far again. Secondary, and then this is where it started to launch from there. So going back to the same kind of situation on what we have learned, this is your last guy who started the sell. If he's above him, then all these guys are trapped and then potentially buying from there. But yeah, I think it was too high up. Yep, it's all the way up there.
Yeah.
Yep.
Yeah. I took another one on CAD Swiss. If you got time, we can look at it. It's kind of
Sure.
Not happy with it.
Sure.
Sometimes those are the ones you can learn from.
Yeah. The bad trades are the ones you can learn from. But Eric, so this one would be your primary trade then. You sometimes you still see slow down enough for you to get in.
Yeah.
It's like the perfect entry, the perfect scenario.
Yeah. This point.
CAD Swiss.
Yeah, this one's kind of similar. Let me see. Yeah, so yeah, the big view was trap in this area. So extended way out. That's a long period of time. And same situation, kind of 2 levels to trying to take basically the same thing we just did, taking this little bounce off of the lower time frame, 5 minute.
Okay, so the difference here it's this primary it could be from a higher time frame situation as opposed to Aussie New Zealand, just because it's far away and all this time has passed with so much data. So
yeah,
in that case, let's just say if you're looking at this view here, well, it could be a daily kind of situation because see on it's definitely a daily. If we're looking at a refresh coming in, we want to see sells, right? So in this case, this push, this sort of is already like the primary kind of thing going on secondary. So this is sort of like a daily pullback. And
Yeah, set 1, set 2. Kind of
yeah. Set 1, set 2. So set 1, set 2 situation.
So yeah, it's much higher.
Yeah. But I know what you're trying to do. You're trying to look at this piece alongside, this piece here alongside this temporary uptrend where there could be some bounce for, I don't know, maybe a daily primary kind of situation.
Yeah.
Okay. Yeah. So in those kind of cases, again, because you're fading pretty much a downtrend, the same principle goes for the one earlier. If you do get in, you want to get out quick, the kind of situation.
Gotcha. Yeah, it got me out quick on this one.
All right, so let's have a look. 5.
So this is where I got, I think, caught up in the nitty gritty little movements. Let me look on my chart real quick. And it was, yeah, it was right around. So yeah, I was looking at this coming down, this last push, and then I got caught up in these little movements right here, as this was my guy who started, knowing that New York was soon to open stock exchange. I think that's what that candle is.
Mm-hmm.
So I saw this guy get taken out with volume, but one thing I realized that there's a lot of volume at the top. And so kind of I was just doing a simple, hey, this guy got trapped. Let me set a limit at right here and we'll go for the buys. But and then my bigger trap was actually a little bit lower. I don't think we actually ever hit it.
So I think that's where so it's around this kind of zone, right?
Yeah.
Yeah. So it might just be using the last little area right around here. So
yeah.
On the 5, I wouldn't say this is looking at too much nitty-gritty. In an ideal scenario, if this thing goes up, this is more than enough to consider because there is still swings here. So it's fine. That part is fine.
Okay.
Yeah. I think it's more so of other aspects of the trade, i.e. the volume or the fact that it hasn't really come down there enough.
Yeah. One question I did have as I was doing my PA, I don't think I said it in it, but it was this push up. The majority of that volume, I believe, was at the top. And then would that technically be volume in front of us if I'm trying to buy that? Does that make sense, what I'm asking?
Yep. So you got to look at it this way. So in other cases, let's say this push goes up. Let's say you have high volume here and then you're looking for a buy. It's not really volume behind you because in this case, right, we're looking at this up move and where's the guy who started? There's no stop between, right? So it's all here or here.
Okay.
So this volume may still belong to the buyers.
Okay.
So the situation is only different if you have this on the 5, right? And then you have 5 minute high volume there and you're waiting for an entry, let's say here. Then that's different because the buyers got killed. Not just that, the volume is saying sells.
Gotcha. This is just one push.
Yeah.
Okay, so that could still be a safe area even if the high volume's there with the single push. Okay.
Yeah. It's a concern, but it's not like a super red flag kind of thing.
Gotcha. All right.
Yeah. So in this case, that swing, I think it's fine. It's enough. So in this case, it's not really about this that causes the problem. I think it's more so of the 60-minute trap area, which could be a little bit tricky.
A bit lower, and it's a huge. I think it's like you said, it's from a bigger picture too. So going down to the little 5-minute could be hard to get the timing right.
Yeah. Sorry. Yeah, I'm also looking at another thing here. So the buy you took was here, right?
I believe so.
All right. So if we go back to the 5, here's the thing about primary or any kind of what's it called? When you're fading a strong move situation, you want to get out quick because someone above is trying to sell, right? So in this situation, I will usually just mark out every type of SNR that could cause me problem. So the buy that you were executing was around this zone here, right? Now you want to see this is a low here, where if someone is trying to do a primary, someone up there might still think it's a sell. Okay, so if I just put this on 2 charts, are we on the same? Okay. Where you're buying here on the 5, the 5 here, it just came from the 60-minute area. So I'm going to do this time 60. Okay, time 65. All right. So let's assume that you're trying to do a primary off here, and primary cannot go far because someone above is still trying to sell, right? So in this case, when you're doing the buy on the 5-minute here, it's coming off an area where other traders may think it's an SNR to sell.
Okay, that makes sense.
Yeah, so
pretty big area too.
Yeah, these guys just got sort of like their pullback to go down. That kind of thing.
Mm-hmm.
So you don't want to stand in front of them. So unless this is not so much here, it's unless there's nothing here and the only SNR you see is all the way up there, then it's okay. This is more so of technical analysis stuff where you have to just keep in mind, because when you're trying to do a primary buy cannot go far because these guys just got their pullback to sell. Yeah, I think that's the main thing for this trade. For the sell, the buy is not really trying to perform.
Okay. So it wasn't too bad.
Yeah, you just need to be aware of where next levels are.
All right.
Yeah.
Thanks, man.
No problem. So Aussie, New Zealand, see like the next possible SNR area is there, right? These ones are a little bit small, so not too much of a concern if you have higher volume at the bottom. So that would be your SNR versus the CAD Swiss was right where you entered.
Yeah. This one had more room, a little bit more room, and it did react off of that too. So
yeah. Yeah.
Cool.
So minor details like that. I think you guys are on the right track.
With your help.
No, I'm just guiding you guys.
Much appreciated.
No problem, man. All right. Yeah, we'll wrap it up for today. Hopefully yesterday's class makes more sense. Today we covered some stuff where any doubts can be, resolved. Not too much confusion going on anymore. Cool. Yeah, maybe try and look through some lessons, old lessons, and if you guys have any question, we'll talk about them for the next 2 days. 2 days?
All right. Sounds good. Yeah.
Yep. And Laila, thanks for the review. And try to put in my name as well. So
I missed. I didn't know if I was supposed to do that or not. I just followed. Okay, write something about the host. Okay, the host is Lucas, and I just didn't.
No, it's good. It's just because the management needs to see if it's coming from Ali or from me. But yeah,
Okay.
yeah,
I'm
they
gonna
know.
write again.
No problem.
Yeah.
All right.
Sorry, whereabouts the reviews? Is that,
I think
where do I go to?
There's an email.
yeah.
Oh, I see. Right out. I've been running around, so I'll catch up with that. Thank you.
Yeah, no problem. Yeah, appreciate it, guys. Yeah, I'll see you guys tomorrow then.
All right, guys. Bye.
See you guys.
Bye.
Bye-bye.
See you.
Bye bye.
See you.
See you.